All right, guys. Today I'm going to prove that ICT is wrong about volume. You see, there's a lot of ICT lovers out there, and trust me, for a year I believed all of his bullshit. Like, I'm not just like some ICT hater. I was somebody who fell for all his fucking party tricks, which he has many. And I'm going to prove to you that what I'm teaching is actually how the market is working. And one thing ICT says is that volume doesn't matter. He says all volume is spoofed and manipulated. It doesn't matter. Okay, so what I'm going to take here is one of the highest volume candles from this whole area. Okay, so if you mark the high and the low of that high volume candle, guess what happens when price trades back into it? There's a very strong reaction to the upside that lasts for, I think that's almost 2 weeks. And look, even here it struggles and there's still a strong reaction. Eventually it kind of gets cleared through. You know, it's not gonna keep working forever, but it could work if for some reason price sells off back to here, which I highly doubt. It easily could never come back to this price ever again. Who knows? But after all this, it seems like it's probably done with this and ready to make its next leg higher, as this index tends to do. But as you can see, there was a strong reaction there, and it's based on the fact that that was a very high volume candle. Sorry, excuse me. I'm really tired, barely slept, but this is how it works, guys. This is where the institutions find liquidity. High volume, lots of resting orders there. ICT's correct about liquidity sweeps. He's just wrong about where they are. He doesn't realize volume is actually essential to identifying them. He thinks it's manipulated. I understand they could manipulate volume, but it's not. This is how it works. High volume candle, price reacts to it. Guess what? There's another the highest volume candle since that candle right here. Let's mark out that candle. Guess what? When price trades back up, it gaps away from that candle, comes back up into it, there's a short. Guess what? We're in that candle right now. That's why you're seeing some selling right there. It's just naturally going to occur because of the resting orders. I would say probably if it punches through this and gaps away to the upside, then returns to this, it's a buying area. Okay. Yeah, this is really how it works. This one hasn't been reused, but if price had traded back down to there, you would have gotten a really good buy entry. So, I mean, it's going to be a little bit, it's not going to be the most perfect thing ever, but like it's going to give you some really good trades. Just wait till price has moved away from it and then comes back into it and you've got yourself a trade. Yeah, I mean, look, here's another example. High volume candle. Mark out the high and the low. Look, price begins gapping away, trades back into it, gaps away, trades back into it, gaps away, trades back into it. Keeps confirming to the long side. Big rip. Right? This is how it works. It's so obvious once you see it, right? ICT would say that volume's nothing, and that's not true. Volume is everything. Volume is everything for identifying a liquidity sweep. Now, it's not going to perfectly, again, it's, this is a long biased asset, so it doesn't mean you get to short from every high volume candle that's above price. You could try to, though, but I'm just, especially to the long side, buying high volume candles that are beneath price, that price is like closing above. On the daily chart I'm talking about, you're going to have some really good trades. Let's see. So you see this high volume candle and this fair value gap. ICT would have you believe that that's like why price could reject from here and stuff. There might be imbalances there. Again, this is a daily chart, so this fair value gap stuff, it's kind of valid. But look at this. Where's the high volume candle? It's actually this little candle right here is the high volume candle. So when you mark out the high and the low of that candle, guess what? It becomes quite clear why price is rejecting to the sell side here, right? I mean, it's that simple. Every rejection in this area is in that candle. Okay, you can't disprove that. Okay, it's pretty fucking obvious once you see it. So, I mean, what else can I say? Oh, let's look at this one. Okay. I guess this is the really high volume candle right here. So we'll look at this. Look at this. One of the highest volume candles this ever used. That was the exact bottom of the bear market. But look, mark out the high and the low. Price gaps above it, meaning that when I say gap, I mean that the low of the candle is closing above the high of that candle. It does it multiple times. Every time it retraces, it's going back into it. He's talking about order blocks and stuff, and I'll tell you, this is the real order block then. So you see, ICT, the terms and the concepts he uses conceptually are valid. So I don't know if he's deliberately a fraud or he's just like barely missing what the real truth is. Okay, but if you want to use an ICT term, let's call this the real order block, meaning that there's so many orders within this high volume candle. That's the order block. As you can see, as price moves away from it, indicating it wants to move upwards, and then it retraces into it multiple times. Every time it comes back into it, it's a buy. You could add to your position. Okay, so I hope this helps. This is, I mean, I already spoke about this, but I'm just showing you that it works on anything on any time frame.